So how do you take decision? On what basis do you take a decision? Let's say, for example, if somebody asks you, if do you want a Maruti Suzuki or a BMW car? So what is going to be your answer? So obviously everyone wants a BMW car, right? So it's very hi-fi, it's very luxurious, but people don't say what is going to be or what the BMW is, the trouble BMW is going to give you in the long run. Even a small scratch in a BMW is going to cost you 40 or 50k when it comes to India, right? These decisions are it's embedded into our subconscious mind. Everyone wants to be in the comfort zone, so we are going for a BMW car. But in the long run, Maruti Suzuki is best for you. Even your neighborhood mechanic can repair any problems. You don't have to worry. It is very cheap, that and this, right? Now, when it comes to stock market, how do you take decisions? See, I took a very bad decision on Wednesday. To give you some proportion, on Wednesday, my account was in a profit of around 2.5 lakhs. The next day, when the market gapped down, my account was in a loss of 5 lakhs. So that was the amount of losses we made due to the big gap up, gap down. Sorry, it's not a gap up, gap down, which happened on Thursday, right? So you know, Dow Jones fell more than 1,200 points. Nasdaq, S&P, everything was falling more than 5 and 5.5%, right? Now, on what basis? You shouldn't be taking, that is day-to-day decisions, right? That is one case, right? But day-to-day decision or in long, that was a day-to-day decision. What about the long-term decision? Whether the markets are bearish or whether the markets are bullish, how do you estimate this, or how do you recognize the market, right? Now, there are many proxies. You know, there is a very, very important proxy or very, very important indicator which is called US 10-year bond yield. You have to understand, you have to know if you want to know the sentiment of the market, if you see the 10-year bond yield, you will know what is happening in the market, or overall picture will be shown from the 10-year bond yield. Now, before going into the charts, and I will show you the US markets, we will see the US market brief in this video. But before going into the video itself, I will tell you what is 10-year bond yield. In layman terms, 10-year bond is something like Bharat bond. It's a 10-year bond yield is something like a loan to the government. See, what the US federal government does is it issues bonds and it collects money from investors, and in turn it gives some interest. Now, whenever this bond interest rate decreases, it means there is lots of supply, bond supply in the market. Or literally what does that mean is that smart money is they are confident that they can earn more somewhere else, and they will take the money from bonds and invest in equities. So if you see the historical chart, you can see that whenever this interest rate decreases, when it increases, means there is a supply, more supply. Whenever it decreases, there is high demand. Now there is a high demand for 10-year bond yields, because people, smart money, think they cannot earn more in stock market. That's why they are shifting their money from equities to bonds. Now, if you see this chart, this is the Dow Jones chart. So I hope you see this chart. Yeah, right? Sorry. Yeah, this is the Dow Jones chart. Sorry. Yeah, this is the Dow Jones chart. So if you see this Dow Jones chart here, you can observe that we are almost at the support. Now, what is the support? Pre-COVID levels, that is before March 2020, Dow Jones was around 29,534. Now we are almost there. The lowest point made by Dow was around 32,000. Around 32,500. We are just maybe 2,000 or 2,500 points away from lifetime high to Dow Jones lifetime high to low is Dow Jones is down by 20%. At the same time, if you see Nasdaq, which is one of the worst hit indices in the world, is down by almost 30%. And if you see the S&P, it is also down by more than 20%, like around 20% from lifetime high. Now, if you see the US 10-year bond yield, now this is the, if you see here, if you can see the date, before pre-COVID, bond yields was on an average. But after the COVID, it started falling. Why it started falling? Because the Federal Reserve was in fear that the economy will melt down, slow down, so they reduce the interest rate. When they reduce the interest rate, business are going to lend money from banks at a cheaper cost, so economy will grow. Then you know what happened, we saw bull run, even Indian markets, Nifty moved from 7,500 to 18,600 and all, right? So what does that mean is, you just have to invest the whatever indices, let's say Nifty or Dow Jones, you have to just invest the chart of Dow Jones. That is going to be the proxy of 10-year bond yield. When 10-year bond yield is at lifetime high, markets have to come down. If the markets are down, 10-year bond yields are going to be high. Now, if you see here, 10-year bond yield is at almost lifetime high, which means there is a high demand for 10-year bond yields, and which means smart money is moving from equities to fixed asset or debt instruments. So they believe that equity is not going to give you good returns. That's why they are moving the money from equity to fixed asset or whatever, right? So if the market has to move up, this sentiment, this 10-year bond yield has to reduce significantly, which is not happening. Now everybody is talking, they are even in one day they are turning from bearish to bullish. I'm not saying anything wrong. Maybe they are right. Who knows? Maybe we are wrong, right? That time only will say. But for the markets to go up, for the markets to go significantly on the upside, these proxies has to come down. If that doesn't happen, both 10-year bond yield and equity is not going to give you high returns, right? So when this proxy or when this 10-year bond is going to reduce, then only we will see stability in the market. Until we don't see any stability in a reduction in 10-year bond yield, we are not going to see the market going on the upside. Markets may going forward, markets may be very, very choppy. Things may not work in our favor. So these are the very, very important proxies. See, US market, advanced markets like US and all, they use these kind of proxies to gauge the market sentiment. Now the overall market sentiment is very, very bearish, or investors are not comfortable with the market. I am not saying market is going to go down. I am not saying it is going to crash. It is going to be choppy. It will test major resistance. Unless this 10-year bond yield comes down, market is not going to go anywhere. So this is my opinion. I may go wrong. I am saying it again. I may go wrong. I may go right? So let us see how things pan out. But what I think now is that better to not take any positional trades. Even yesterday I saw the US markets like Dow was swinging very high, around 600-700 points swing. So whenever market closed yesterday, it was flat, then it came down by more than 600-700 points. Then last 1 hour it has recovered fully. So these things are happening, and remember this very, very simple logic. Always you check the 10-year bond yield, which is the best proxy to see the market sentiment. I am saying you again, if the market participants are really comfortable, they will move the funds from bonds and they will put in equities. Since they are not confident about the market, they are moving from equities to bond. Now India is a different story. You know, retail traders after post COVID, many retail traders have come into the market and they are just holding the market. Even though Dow Jones is down by 20%, Nasdaq is down by 30%, S&P is down by 20%, our markets are just down by 12 or between 12 to 15% from lifetime high. I'm talking about Nifty. So you decide whether you want to go long in the market or short in the market, seeing these proxies. Now what I can say is markets are going to be really choppy. Either it is not going to go on the downside or it is not going to go on the upside. Markets, there will be lots of gap ups and gap downs unless we see clear picture what is going to happen. Many people talk about this recession, you know. If Federal Reserve keep on increasing the interest rate, there might be a possibility of inflation and all they are talking. So let's see how things pan out. I thought I should share with this with you. Let me know what you think on the comment section below. Thank you for watching. Take care. Bye.